Hey guys, it's Jason again from Forex Varsity, obviously, and today I'm gonna go through. Most people, I know you've heard of the oscillator called the MACD, so it's called a moving average convergence divergence. So convergence, just a quick explanation of that. Convergence is when price will squeeze, or the MACD will squeeze, so lines will come closer together, and divergence is when they draw further apart. Okay, so most people just don't. I've found that the MACD actually works the best for me to get in. Well, not necessarily actually to get in, but to give me a better indication of if I'm right or wrong. Okay, so I could do my analysis, I can draw my zones and everything, and then once I have got all of that, I look to see if price is turning, and then I look at the MACD. So what the MACD does is it's based on a weighted moving average. So it measures the average price movements, obviously, and then it plots it in a line. But it also shows momentum, how strong the trend is going, or if the trend is weakening, and then therefore you know that that if you were in a buy and the trend is strengthening and the MACD, the histogram, I'll put it on the chart with you guys now, or you can show me. I'll show you how to put it on the chart. But what it does is measures the price, and then you can see with the bars. So the bars are called the histogram bars, and what those do now, I'll show you now, are if they're above the zero line on the MACD. So what the zero line on the MACD is the equilibrium line, and that's the most important line in the oscillator. And let me actually just add it to the charts with you guys. Okay, so click insert, oscillators, MACD, and it's meant to be 12, 26, 9. I put it on close, so you can, but everybody to their own with that. So what's the MACD is this, as you can see on the 4 hourly, this is a 4 hourly chart of GBP USD, and what you can see on the 4 hourly, as soon as the bars over here, these are called the histogram bars, as soon as those got bigger and bigger, from this point they moved all the way down, and can you see how price just pushed and pushed and pushed down, and once that's why I said the equilibrium line, as in the zero line, is the most important line in this MACD, because the reason for that is it shows you at where the price is. Okay, so well, with regards to the trend, it shows where the trend is on the chart, and it shows you how strong that current trend is moving. So MACD, as I said, moving average convergence divergence. So what I mean with convergence is when the histogram bars, they go smaller. Okay, so that what that indicates is price is actually losing its momentum. So let me take you through this example again of price was in a downtrend, say from here. It started, it made small waves on the histogram, so the obviously you can see clearly that above the above the equilibrium line, that means the trend is starting to go up a bit, but it depends. Obviously you can compare the histogram bars and you can actually see that you can differentiate between and compare the length, for example, of these bars, and you compare it to this, and you can obviously see that once the bars increase and they get longer and longer and longer and diverge, that means that price is obviously going downtrend now, and it's getting stronger and stronger and stronger, and then price is losing a bit of its strength and momentum here, and then you know that once it gets longer again, obviously price is getting stronger. So why the equilibrium line, so the zero line, is so important with the with the MACD is because it shows once price has lost its strength and now is ready to turn. And that's why when you use an oscillator like this, such as the MACD in this example, you mustn't use oscillators to get into trades, guys. You must just use it as extra confirmation, as you know for yourself that if you want to get into a buy, you have to wait for the histogram bars to be on top, okay, of the equilibrium line, so you know for a fact that you're trading with the trend, and that would give you the most high probable trades. Okay, so it's just there for your for your trends. And when I actually use it is, I'll show you a different way to use it as well, but it's not recommended. Once you understand it properly and work with the MACD properly, you can use the way I'm going to show you now. But I'm just doing the basics now, and then I'll dive into that. So what I use with the MACD is I also exit trades with it. So that's when you must use it, but don't use it for entry points, because your entry point is your most important part, and um, your entry is the most important part, and timing of the trade is the most important. And you don't want to use a momentum based indicator, so it just uses the moving averages and it uses a price for its indication. So you don't want to get in using a MACD, but I'll show you how I get in using a MACD and how I would get out using MACD. Okay, so you guys, this is a signal line, and what this signal line is it's just showing you the difference. It's a slow moving average with regards to the histogram. So this is a moving average, and it shows you it's comparing itself with the histogram bars, and it's showing you how the momentum and wave in which price is moving. So the signal line is a 9-period faster moving average in the MACD. So once, obviously, as I've explained already, once the bars get higher and higher or lower and lower, that means it's gaining strength, obviously. And once the lines fade and come closer together and perhaps cross, then you know that trend could be changing. So it actually helps you so much, and MACD is one of the most popular used oscillators. So the MACD can be used to see overbought and oversold areas, and what's so nice about it is can see overbought and oversold areas like as in the stochastic. But the thing is, the stochastic is mainly well known for its for its ranging markets, whereas a MACD can work in any kind of market. Okay, so I'm going to show you ways in which you can use the MACD now, and I hope you guys implement this, because this has helped me a lot. And I hope with the MACD, I also use it on, with regards to the previous video, I also use it to time trades on lower time frames, but that's just for extra confirmation on my lower time frames. Okay, so don't confuse yourself once you start learning about the MACD. So let me just look over here. So MACD is important, as you know. Okay, first of all, you guys need to analyze properly, or normally, must I say, as you must analyze as normal as you usually do, because you must always create your zones and then you use the MACD. Okay, I can't go actually explain that enough, because that's why people misuse oscillators like this, because they think, okay, no, the MACD works so well, and then they get kind of addicted to using it, and they can see when you backtest, and once I show you now how it works, you can see how well it works. But the thing is, your analysis comes into play as well. So just because the MACD is down here and it comes up again, what's still stopping price? Price will not stop just because an indicator is oversold or overbought. Price will go on. Never think, this is one of the rules I live by with trading. I say never think price is too expensive or too cheap, or with regards to the value of price, obviously. So still, you must still analyze with regards to your fibs, your support and resistance, but please don't misuse oscillators, because what most people don't understand about oscillators is that they were actually created to give traders an indication of confirmation in a trending market. So other than the stochastic, obviously the MACD is used and well known and most popular for being used in a trending market and as a tool to let traders exit before the market turns. So as I said, you must use it to exit, because I'm going to show you now how I use it to enter and how I use it to exit. So if I see a trade, let me analyze this. Okay, so say I wanted to take this trade. How I use the MACD to enter a trade is I look at the signal line. So as I explained, this is a signal line. And once this signal line pops out of the MACD, so the MACD histogram bars are coming up. Once the signal line or the histogram bars tick out of it, so they're not touching it anymore, as in, let me just get a shape here, as here they didn't touch it, and here it came in and then came out again and didn't touch it. So now I'm going to show you, this is actually how you use the MACD to enter trade. So you've analyzed, as I said, you must do everything normally. Just get rid of that. So now we would look to take a trade over here. So this is where it's reached our 61, the wick has bounced off, so you know price has been rejected. So now you look at the MACD, and how you enter with the MACD, as I said, you look at the signal line. The signal line just touched out of there. Let me just make this smaller so you can see how the signal line right here ticked out of this, ticked out of the MACD. And obviously this was and then you enter the trade, obviously, to go down, because you know that it's beginning to turn, and then you want to get in with momentum of the trend going down. So let me just show you, once you're in a sell, you can now, how you look to exit, you wait for this. That's why the MACD is actually so popular and so good, because you can get in at the last point. You'll know and get, okay, you won't know for a fact, but you'll get an indication as to where you can get out. So look here, we entered over here, and I only would have exited once it got to so we entered all the way at the top there, and I only would have exited over here. And the reason for that, okay, no, I actually would have exited, yeah, because you can see the reason for that is the MACD has turned now. MACD is turning here, and obviously you're looking to exit, as you don't want to be in a uptrending market if you're in a sell, obviously. So let me show you one last example of how if we entered a trade and I was in it. So say, for example, I mean, you can see how easy the MACD is to use, and that's why I don't want to go into depth with it. Well, I am going more into depth with it, and most people actually don't know how to use it properly, and they misuse it. Okay, so yeah, I would analyze again. And now, this is also the nice thing with the MACD, is you can see that even if the MACD wasn't above the equilibrium line here, you could see that it was still underneath. So the trend was still strong, going down strong here, because the MACD was still under the equilibrium line. So you would generally, this is why it's also nice, is because you would generally, the rule of thumb with the MACD is you should only be selling once the MACD is under the equilibrium line, because that shows more momentum going down. Okay, and so why I kind of break the rules and not telling you this with a signal line is it's ticking out here, you would know to get in, and you would see that even though you're meant to be in a buy, this is an indication of a sell. Well, in this example, so that would obviously be an indication of the retracement going up and it ticking out. But if you were in a sell there, you would know that it's getting weaker and weaker and weaker, so it's coming down. So that's why the equilibrium line is probably the most important line with regards to this. Okay, so you would be in this trade and you would know it's going down, and then it came, yes, it did come up here, but you would have still been in it because you would have known that it's a retracement. Okay, so just go through, yeah, you can spot it so nicely. And that, guys, that's why I said to you, please don't enter using the MACD, because as I said, price won't just stop because it's the indicators or the oscillators told it to. So always, that's why I say always implement your own analysis with it. So yeah, price ticked out over here, you would have ridden this beautifully. You would have taken maybe a 3 or 4:1 take profit there. Okay, so thanks guys, I hope you enjoyed this video. And if you have any questions, please feel free to ask me. Thank you.